Oh no, the camera's not working. Good morning, Trade Pros. All right, good morning, Trade Pros. We're back to action. A little bit of camera issue, but now we're up and rocking. Welcome aboard for our update for Thursday, April the 4th of 2019. It's April 4th already. Wow, unbelievable. Time has flown this year for me and maybe for you as well. Before we begin today, I want to give you a little exciting update. Starting Monday, we're going to be retaping our foundations course. This course was built in 2012 with tools that are archaic, and we're rebuilding that course in its entirety. We're not just retaping it, we're rebuilding it. So if you're in a position where you want to learn the basics and the foundational concepts of trading, this one is for you. All you have to do is be part of any one of our membership levels, and you'll have exclusive access to this live taping. It's going to take place over the next 2.5 weeks. It'll be Monday, Tuesday, Thursday of the week, and we're going to be doing 2 lessons a night. So it's an aggressive schedule, and you have an opportunity to join in and learn this new information. Also, all new memberships have access to 14-day money-back guarantee, and which means technically you could watch the course, and if you hate it, leave and get your money back. I promise you won't hate it, though. It's going to be a great opportunity for you. We're starting on Monday. We're retaping it live in an interactive environment. This is your chance to get a live program online. All right, so click the link in the description. Check out our homepage, tradeproacademy.com, and see what we have to offer. This would be a great time to join the Trade Pro team. All right, morning market fun fact. Most large caps today, most large cap active fund managers rather, trailed the market in the first quarter. Because we know institutional money has been afraid to jump in on this long position. We've seen upside, but very few institutional dollars have actually flowed into the market until very recently. With 39% of active fund managers outperforming the benchmark compared to 57% in the first quarter of 2018. All right, this is according to a study done by the Bank of America Merrill Lynch division. The first thing I want to talk about today is the U.S.-China trade talks. They've hit a little bit of a roadblock once again, and here's the sticking point. It's the tariffs. All right, tariffs have taken center stage in a discussion between Robert Lighthizer and Liu He from China, the finance minister, and this is sort of the sticking point here. Donald Trump wants to leave the tariffs on China to ensure the compliance of any trade deal. So basically, to go in a deal, Donald Trump puts in tariffs on China to kind of encourage them to sit at the table for trade talks and wants to leave tariffs on after the trade talks and the deal's made. Now, naturally, that's not going to fly with China. They're going to have to negotiate some kind of better outcome. And what they proposed is if the U.S. takes the $200 billion worth of goods that are tariffed at the moment, if he removes that tariff of 10% on those goods, China will remove tariffs on the $110 billion they have at the moment put on the U.S. as sanctions. Tariffs, rather, is not really a sanction. And that's the starting point of discussion. This is what's preventing them from moving forward and finalizing and sealing a deal. All right. And remember, Donald Trump said we're 90% there, or a lot of other representatives also said we're very close. This is the one last thing. And I'll tell you this is a big thing. Without this, you're not 90% there. You're more like 0% there, because this is a big sticking point. When you put tariffs on a country and say, let's negotiate, the understanding is that outside of that negotiation, everyone negotiates something favorable for the two sides. They meet in between and they restart anew. That's not what's proposed here. All right. That's what's sort of the stumping ground, or the roadblock rather, for this new trade deal. What U.S. wants to do instead is leave the tariffs on, and as China complies, slowly claw them back until they're reduced to zero. China's not okay with that. So that's the sticking point. Now you know what to watch for. Pay attention. Negotiations are ongoing today as well. All right. This is taking a bit of a farcical turn, because here's what the latest news suggests. This was a report done by Wall Street Journal. Wall Street Journal is an amazing publication with really good, fresh data, especially on the weekends. They have some great articles that come out. I love the Wall Street Journal. Tesla, well, not time for Tesla yet. Here's the thing about trade deals. How long do you think China would have to comply with it? All right, this is what I want to ask you. If you're in negotiation and if the market is so happy and excited about this trade deal, what timeline is there on it? This might surprise you. In fact, I think it will. The United States wants to give China a window of an opportunity to start complying with this and meet full compliance by the end of this period. All right, in order to give them time to meet their commodity purchase minimums and commitments that they've done throughout the deals, and to allow American companies to wholly own corporations and enterprises in China. That's the two big asks as part of this trade deal. How much time do you think they'll have? 2 weeks? No, that's too short. A year? That might be a little bit too long. Well, Donald Trump is thinking of giving them up until 2025, which assumes even if he wins a second term, he's still not going to see the full implementation of this trade deal. So very interesting. Now, that's sort of one point that took the market aback a little bit. It was a bit of a head scratcher with all this negotiation to put a 2025 deadline. That's really far out. And here's what this could be. This could be a political tactic for re-election. You could say something like, I started this, let me finish it, vote Trump. And I don't want to get into politics. And at the same time, this is a very clear opportunity for the Trump administration. So this is something he could be using to ride it out. Other administrations have done the same. All right, Bush did the same thing. I started the war, let me finish it. And a lot of other presidents have gone through a similar re-election campaign bid. And it's a very interesting occurrence. Very curious to see how the market takes this today, because this news has not yet been fully priced in. This news dropped at 3:58 p.m. yesterday on the S&P 500, right as it closed. Traders don't make big moves overnight because there isn't volume and liquidity, and it's up to today's open to see what we think of this. All right, not what I think of it, what the market thinks of it. My job is not to have an opinion and live and die by it. My job is to see the opinion priced in and trade it. All right, here's the thing. Looking to be right on direction is the wrong way to trade. It does not matter if you're right, because even if you have an idea about where you think the market's going, that idea could be wrong. Therefore, being right or wrong is irrelevant. All that matters is being able to gauge the trend, read order flow in real time, and be able to take opportunity of the moves ahead of you. All right, so ditch the bias and look at it from a neutral standpoint. It'll change your whole outlook on trading. 100% guarantee it. All right, that's that. Now, moving on to Tesla. Tesla shares nosedive 10% yesterday. Here's why. It's down 7.1 pre-market. It was down a little bit yesterday as well. The electrical vehicle company reported a 31% drop in Q1 deliverable vehicles to just 63,000 vehicles. So they delivered 63,000 cars in the first quarter. All right, 51,000 Model 3s and 12,000 Model S and X. All right, the Tesla model is to release the Model S, the Model E, the Model X, and the Model Y. So it reads sexy. It's an Elon Musk thing. Who are we to question it? All right, 63,000 vehicles at an annualized pace is 252,000. All right, so at this pace, they're going to deliver 252,000 vehicles in 2019. But Elon Musk said, listen, I'm going to meet the target of 360,000 for the end of the year. 360 to 400,000 is the range that was set by Elon Musk and company executives. So to meet 360, the lower end of the range, they're going to have to increase production by 42% of deliverable vehicles. And there's a lot of celebrities on Twitter going in there saying, I'm locked in my Tesla. How do I get out? And it's, that's not a positive publicity event, even though celebrities are endorsing your product in one way, right? In another way, they're stuck in the product that they're endorsing. And speaking on Tesla today, we wish Elon Musk good luck in court. He will be in court today, where the SEC is trying to hold him in contempt of a previous court order that he violated for tweeting some information that was material, non-public. And it's going to be an interesting day for that. Listen to Squawks, watch the news. If you're a Tesla shareholder, today is an important day for you. If you're a day trader, Tesla moves, it moves very volatile. And if there's any updates, it's going to be interesting to hear them and how they impact the market overall. In addition to this, we also have the Boeing report that surfaced today from Ethiopian airline investigators. They are putting the blame on the Boeing 737 MAX model, MAX 8, saying it's the fault of the technology provided and not the pilots and the training that they provided. So this situation is getting interesting, and Boeing is rebounding off some of the lows off this news. Very interesting to see how these reports come in over the next couple months. And if it's not a Boeing 737 issue, then the stock can rebound. If there is liability on the line as a result of the technology they implemented, and the fact that they sell some security features as a sell-on or an add-on or as an upgrade, rather than provide it as standard in the aircraft and bump the price up, there's going to be trouble for sure. All right, so we're not really out of the woods here yet, but just want to provide you that update. In today's markets, in Asia, Japan's up 0.1%, Hong Kong's down 0.2%, China's up 1.2%, India's down 0.5%. So you see Asian markets are mixed. In Europe at midday, London's down 0.5%, Paris down 0.2%, and Frankfurt up 0.1%. In the United States, Dow's down 0.1%, so is the S&P and NASDAQ. Here's an interesting part. China and Europe are 16% off of their market all-time highs. Japan's 30% off of its all-time highs. The UK is down 10% off of its all-time highs. Mexico is down 20% off of its all-time highs. The U.S. market, S&P 500, is just 2.2% off of its all-time highs. So you know there's strength in U.S. equities, and the question is, will we be able to break out of the upside to fresh all-time highs because of some Fed dovishness while other global equities remain suppressed? That's a big question that we're following with, and you have to follow global markets in today's trading environment. All right, gold is down 0.5%, crude is flat, Bitcoin is down 0.7%. Back down to the 4,000 range. This morning we had initial jobless claims that came out at 202,000 versus 215. That's a positive. Less people filed for unemployment. It's a positive economic number. All right, 4-week average is down to 213,000 versus 225,000 prior. So this report pulls the average lower, but the prior report is revised higher by 1,000 initial claims. Not a deal breaker. So all in all, this is a positive jobs report. Speaking of jobs reports, tomorrow is the big day. Tomorrow at 8:30 in the morning, we're going to have the non-farm payrolls, the monthly report, and we're going to have a look at the jobs added in the month of March. Very, very important report. Elite team, our elite traders and subscribers, we're going to trade this together live at 8:15 in the morning. So get ready. You'll see an email today. We'll be doing it in the elite team room, and there's going to be a great opportunity for us. 10:30 this morning, we have natural gas. 1 p.m., we have Fed's Harker speaking on monetary policy. 1 p.m., we also have Fed's Messer speaking. 4:30, money supply and the balance sheet. The weekly money supply and balance sheet updates out of the Federal Reserve. I just kicked the camera, not once, but twice. I'm getting antsy here. Let me turn around, open up the trading room. You guys have a great rest of your day. Hope you enjoy this morning market update. Today in the S&P 500 markets, I'm seeing a consolidation sideways day to slightly bearish for a bit of a sell-off, despite the fact that you got some really bullish statistical numbers. The Dow is up 66.7% of the time on this day, going back decades. S&P is up 61.9 and NASDAQ's up 57.1% of the time. We have positive expectancy, but this feels a little bit heavy, and the latest China-U.S. trade news is not great, and I think that's going to weigh on the market. So neutral in the morning, it's a slight bearish, and then we'll see how the afternoon pans out. You guys have a great day. Thank you for being here, and manage your risk, trade TradePro. Take care and goodbye. All right, Trade Pros, let me talk about S&P 500. We'll hand it over to Victoria to talk about NASDAQ. And then our oil desk manager, Stephen, will take you through a recap of oil markets this morning, which are now selling off down to the VWAP. All right, so let me start with the S&P, give you some good levels and trade opportunities for the day and where I think the opportunity is going to be. I'll tell you one thing. We have a high percentage likelihood of a consolidation, but when we get the breakout, it's going to be huge, and there'll be a big opportunity. So let's jump into it. I'll start with S&P.